Joining me now is Walter de Vet, Head of Commodities Research at Standard Bank. Thank you so much for joining us. Walter, in terms of what we're seeing, I mean, it seems that commodities can do no wrong because we have so much growth out there in terms of fundamentals coming from Asia, but also the world is just becoming a little bit gloomier. So for certain assets, it's speculation. If we're in double-dip recession, how much of an impact will that have on commodity prices?
Absolutely. I think you also want to look at what commodity you're looking at. Because you have to remember, although the global growth is not as strong as everybody would like, certainly for some of these commodities like copper, like iron ore, of which the big diversified miners, of course, have a lot of exposure to, these markets are still in fundamental deficits. And yes, we do expect China's economy to grow not as strong as it did, for example, last year, but commodity prices should still remain fairly well supported.
And this is despite a double-dip recession. Let's say that the USA gets downgraded, and this pushes not only the US but also Europe in a double-dip recession. You think prices can maybe not rise as much but stay at these levels?
Exactly that. We think right now, especially for industrial commodities like copper, like iron ore, upside is fairly capped. But once again, they are at very high levels, especially towards, if you look at in terms of cost of production. So yes, we think upside is a bit compressed, but it's possible.
So Walter, the big unknown, of course, is China. It's if China falls off a cliff, that's when these commodity prices will really suffer.
Yeah, absolutely. That's the key at this stage, because a lot of the stuff that's happening in the US and Europe is already priced into markets, not only commodity markets. So yeah, China is definitely the key market for commodities.
And what is the chance that actually it is overheating? Because the government has been taking some very strict steps to make sure that the economy is cooling off nicely, not too much, but certainly not to make it fall off a cliff.
Unfortunately for China, the key thing is inflation, and we believe that inflation is continue to move higher. As a result, the PBOC will continue to tighten, and that is key for the manufacturing sector in China, which we believe will continue to produce slow growth and possibly contract next month. So that is key to us. Although, once again, a lot of the expenditure in China is driven by government and not so much private sector.
Walter, how much are you concerned about bottlenecks? Because, you know, I was just speaking to the CEO of Randgold, and he says, I asked him, why don't you overproduce? You know, at 1,600 and up, you should be putting more stuff out there. And he's really concerned that actually there will be overproduction, and if there's a slowdown, then that will hurt prices.
Yeah. Well, once again, I think you want to look at what commodity you look at. There's definitely bottlenecks in the market. Once again, if you look at metals like copper, like iron ore, there's great bottlenecks from the mining site all the way to the final producer, which once again supports prices.
But give me an idea, copper, how much do you expect it to rise?
We think copper can trade all the way to 10,000, but it's been there already this year. So we don't expect significantly new highs this year, although next year we do believe the market will be much tighter and we will move higher.
All right, Walter, thank you so much. Walter de Vet there.